Hey, what's up, guys? John here. The Federal Reserve just cut interest rates by 50 basis points.
The Federal Reserve cut interest rates for the first time since the beginning of the COVID-19 pandemic.
Cutting interest rates by half of a percentage point, a 50 basis point rate cut.
But what happens next is going to shock America. I have inside information about what's going to happen that has basically been in the works for over 10 years. And it's going to unfold over the next 6 to 12 months. At least that's what the data is suggesting. We're walking into a dollar crisis. I mean, dollars are going to be worth less and less and less dramatically.
For all of our lives, the dollar has been the king of currencies around the world. But is that about to change?
Not like what we've seen the last year, 2 years, 4 years. I'm talking a radical devaluation of the dollar and a radical problem that's going to be felt by tens of millions of Americans as the middle class begins to get absolutely punished by what's going on. Take a look at this. In July, a report on the fall of Denver and the fall of Ohio, 2 months before the media. In 2023, I predicted federal rent control would come and food price controls would come to combat inflation. The White House is now working to make both of these laws.
Passed the first ever federal ban on price gauging on food.
My incredible team provides tomorrow's news today. Only 30% of all viewers are subscribed. If you subscribe, the algorithm will reward the channel and we can expand and grow and hire more researchers. Thank you for simply clicking the red button to subscribe to the channel. Now on to the video. You tell me if you think that this is a radical prediction. I've made many radical predictions in the past. So far, almost all of them have come true. The reason I'm not just shooting from the hip here, we're doing tons of research and tons of digging to get this information before we talk about it here. I mean, look at this. So you have Jared Bernstein. Yeah, Jared Bernstein is an economic government official who is the chair of the United States Council of Economic Advisors, right? Jared Bernstein on whitehouse.gov. You see it right here. He is under President Joe Biden. Jared Bernstein serves as chair of Heather Boushey and Karabo Jackson serve as members of the CEA. Together, they are helping steer America's economic recovery and ensure that our nation builds back better. Now, this article came out October 7th, 2014. Strong or not, the dollar's reserve status hurts America. Jared Bernstein, the economic advisor, right now inside the White House, is saying this. He says, in late August, the New York Times ran a provocative op-ed by Jared Bernstein entitled "Dethrone King Dollar." Yes, here was a former White House economist, Vice President Joe Biden's chief economist. So 10 years ago, same chief economist, no less, arguing that the dollar's status as the world's reserve currency is a privilege America can no longer afford. So he was saying this 10 years ago. Then you have Janet Yellen saying a natural desire to diversify. Janet Yellen says Americans should anticipate a decline in the USD as world's reserve currency. The same thing as the economic advisor is saying. What you need to know and how to prepare. Yahoo Finance. This isn't some tinfoil hat website, some weird website on the dark web. This is Yahoo Finance. This is CNBC. Calls for move away from the US dollar are growing, but the greenback is still king. They're prepping America for this. You hear about what's happening with BRICS nations, people and countries looking to diversify in other ways, gold and other currencies. It's happening. This is what's happening. Here you have 2007, this is eerie. They didn't cut rates for 4 years. When they did cut rates, what was the date? The date was September 18th, today. The same day that we cut rates. We haven't cut rates in 4 years. It was March 2020. So here you have this period. They cut rates the same exact day. And then markets soar after Fed cuts rates by half a point. Same exact policy today. Now, they have CBS saying the Fed rate cuts today for the first time in 4 years. What does this mean for your money? And they allude people to believing that we are going to see really good things for credit cards. We're going to see, possibly mortgage rates going down. And, it's going to be good for consumers. But when you look at what's actually happening. Here, auto loan rates are likely to see reductions after the rate cut, experts said, and that could convince some consumers to start shopping around for vehicles, right? So they leave us to believe that things are going to be good. Things are going to be okay. What they don't tell you is that credit card interest rates are about to go parabolic. And why? Well, there's no limit on how much credit card companies actually charge you. So they could charge you any interest rate that they want. There's no usury laws. People don't know this. This is bankrate.com. While many states have usury laws that limit the interest rates that lenders can charge, many of these state laws don't apply to credit card rates. Instead, they apply mainly to loans, and even then, financial institutions tend to get around them through exemptions. And then when you look at the map, this is from NerdWallet, you see that credit card delinquency rates are in most states, or Wallet Hub, excuse me, most states are 15, 18, 20%. I don't see one that's sub 10% throughout the entire country. Florida's 15%, 28%. I would say as an average, we're probably somewhere around 20%. Some of these, outliers here, 30, almost 40%. But I would say on average about 20% defaults. If you were a credit card company right now, what would you do? Would you slash rates or would you increase the cost to borrow money because you're going to like to see more and more and more people unable to pay you back? Right? You probably increase rates. And that's what's going to happen. The predatory lenders, they're going to be coming out. So as this is happening, credit card delinquency is rising. Here's what you can do if you're at risk. The Fed cut does not mean mortgage rates will suddenly fall, but lower rates are coming. And then you have Boeing. Today, they're furloughing 10,000, look at this, furloughing tens of thousands of employees amid machinist strike. These corporations are looking for ways they can cut employees by the tens of thousands, in some cases even more. You got Amazon, you got, Kaiser going through a strike, UAW going through a strike, Stellantis, you have airlines, teachers. It's across the board. What are the odds, right? It's obvious that it's going to be a major period of disruption across the entire labor market as this entire crisis unfolds. You have JP Morgan coming out today saying, we got to create a new role overseeing junior bankers as Wall Street wrestles with workload concerns, right? Right around the same time, they're talking about a 4-day work week. Jamie Dimon himself was saying, that's what we need. A lot of these billionaires are talking about 4-day work weeks and universal basic incomes and all these different things. The world's changing. If people think we're walking into a soft landing, I wish that was the case. But if you look at the facts are alluding to something else. Let's look at 2008. How did 2008 actually start? Predatory lending in the form of subprime mortgages targeting low-income homebuyers. Now, let's look at this. Bank of America offers zero-down mortgages in certain communities. There was a lot of very, very, very easy mortgages to get, like ninja loans, the no-income, no documentation loans that were out there. They were offering the same policies. Excessive risk-taking by global financial institutions in the last 4 years. Commercial real estate, the lending that was done in 2021, it's no words for it. It was unreal. The amount of money that was flowing into deals that they shouldn't have gotten funding. They were just lending money left, right, and center. Banks were making tons of money. The bankers are making money on fees. Mortgage lenders are making money. The real estate agents are making money. Everybody was making money, right? It was a great time. But chickens are coming to roost. Now a continuous buildup of toxic assets within banks. One thing many people don't realize, and also just to add to real estate, you have VA home loan. There's a VA mortgage forbearance, va.gov, sources matter, va.gov, saying that we're calling for targeted pause on foreclosures December 31st, right, till the end of the year. Then you have same thing happening with FHA. HUD announces FHA loan program. It's a payment supplement loss mitigation program, which will allow borrowers to reduce their monthly payments by 25%. Their monthly payments 25%, so they don't have to record a default, a delinquency, a foreclosure as public record. So it's happening on VA loans, happening on FHA loans, and then you have even student loans. A big problem for a loan relief program ends in 18 days with credit reports and loan forgiveness implications. That came out September 12th, right? So all of this is all set to hit the fan end of this year. Now, am I saying that everything's going to hit the end of this year? I think it could hit the next 6 months, the next 12 months, it's looking like. But I think some things are about to get pretty crazy. We're not going to see a soft landing, especially when you look at this. It says the bursting United States housing bubble culminated in a perfect storm. What about the bank term lending program? When Silicon Valley Bank fell, First Republic fell, PacWest got acquired by Bank of California. There were all these problems in March of 2023. And they said, you know what, we're going to lend $165 billion to 1,804 banks to help them weather this storm. We're going to give them, full value of their commercial real estate, full value on their loans, so they can weather the storm and then they can pay us back. They have a 1-year window, like a hard money loan to pay us back. Well, that expired March 11th. So 6 months or so, 7 months, they're going to, these 1,804 banks are going to have to pay back all of that money. And that's going to be a big problem in this environment. They go on to say here that our assumptions is that new borrowing will fall essentially to zero starting Thursday. Looking forward, a smaller bank term funding program points to a faster shrinkage in the Fed's balance sheet, the firm said, noting that credit extensions offered by the Fed are likely to run off faster in 2024 than we had anticipated. So you're seeing that. Fed yanks emergency funding crunch that got too popular at the worst possible time for small banks. And then you got this big situation unfolding here in the next 50 days. So what I think is going to happen? I think the rug's getting pulled on everything. I think things are going to get really, really concerning in this country. I don't think we're going to see a soft landing. I'd actually be willing to bet against that we're going to see a soft landing. Consumers are tapped out. People, 80% of Americans can't go through a fast food drive-through. So, you got the CEO of Kellogg saying we gotta hit consumers where they are. Cereal for dinner, right? Like, this is the America that we're in right now. Do you think, and the fact that they're talking about this for the last 10 years, saying that we can no longer afford, he was calling it a privilege 10 years ago before 2020, before the trillions of dollars. We're spending $1 trillion every 100 days. Trillions of dollars hitting the market, all the money going all overseas, all the sanctions, all the problems that we've caused with different countries. I'm going to bet that we're going to see many countries pulling away dramatically, and America is going to print our way into a crisis. Inflation is going to get bad. Let's talk about this, though. I could be wrong. I'd be curious as to your opinions. If you can correct me on anything that I've said in this video is inaccurate, I'll pin you as the top comment below. On this channel, my researchers and myself, we work very, very hard to give you the best and most accurate information possible. So, let's talk about this below. And also, I'm offering a call-in show. We're doing a call-in show on Friday. So if you'd like to be featured on the call-in show, maybe you are behind on your bills, student loan bills, credit card bills, auto loans, maybe even behind on your mortgage. Maybe your business is in a bad spot, behind on bills inside of your business loans. We'd love to have a conversation with you. You can have a conversation with me. You can book a call below by clicking the link in the top description. There's no charge at all for it. But we'd love to have a conversation with you. And also, if you'd like to fix your credit, we would love to help you as well at my company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to greatcreditfast.com. You can click the link in the description just below the video, schedule a free call, and catch you next video.